here. Welcome to this week's edition of ASX companies paying juicy divs and some good dividend ETFs. Okay, so we'll kick it off for those who haven't seen it before. This is the Australian one-year government bond yields. So you can see in 2021 we broke from our lows, got as high as 4.6. And we're now sort of back in this range around 3.4, and you can see really since April we've sort of flatlined here. You'd even have to potentially say there's a bias to the upside, which is interesting when you compare it to the US one-year government bond yields, which look like they might be about to fall out of bed. So a bit of a different comparison. We know the Fed cut rates by 0.25%. Mr. Market thinks might have to do a little bit more. Okay, the Aussie 10-year yields. So again, they April 22 broke out. They've sort of just been ranging for quite a while, since October 23, in a sideways, if anything, to upside pattern, but really just been trading sideways. This is the Aussie 10-year over the 1-year yield. So the 10-year had been increasing faster than the 1-year rate, and now they're sort of just going sideways, means they're sort of moving up or down together. Okay, enough with the interest rates, Rudy, on with the show. Okay, so just in alphabetical order, so no specific ranking. I get all my dividend information from Morningstar, because I know there's different sources, but just so you know. So Atlas Arteria, so global infrastructure companies, 7.5%. So there's with a few of these, there's no rush, as you know. For you're looking for divs, not shoot the lights out growth. For something like this, I'd be waiting for it to pull back to this 5.10 area. If you can pick it up there, that would be a nice price. AGL, so I had AGL as a buy last week, and we had a green candle, so another green candle, so 5.9. Still really undecided about this whole industry. I don't know it's either going to be us, the customer, who pays for this green transition, or AGL, or the government. My gut feel is the government's going to fund it to make it look good, but then that will just come from our taxes. Anyway, I watched a video about them, and they seem pretty intent on paying a dividend, whatever, regardless. Okay, ANZ, it's my preferred bank. Div of 5, so that's looking fine. APA, so 6.4. So it's at this sort of resistance level. It'd be nice to get it up down here, 8.70. Or you can just buy it now. But that looks pretty solid. Pipeline business, natural gas. Horizon, so Australia's rail freight operator. So 4.9, just near the 5. Anyway, I think anything around these levels is pretty safe. Bendigo, so Bendigo Bank paying a div of 5.0. So I had a bit of an earnings wobble here, but it looks like they've got themselves back on track. BFG, so Bell Financial Group, they're sort of in that financial services space, div of 5.6. They're lining up quite nicely. So if you like the space, have a dive into it deeper, but it looks pretty good. Beach, So all the oil stocks got smacked this week after the Santos takeover fell over. So Beach div of 7.4. You got to say we're sort of at the bottom of the range rather than the top of the range. Personally, I'd like to see a bit of this type of action before I buy, but put it on your radar. BWP. So this is a new one given to me by Cynical. 5.1. So this is be a distribution, property trust, warehouse, bulky goods, retailing properties, high visibility access to arterial roads. So ticks all the right boxes. Chart looks pretty good, breaking out from a declining wedge. So I'd give that one a tick. Data was one of my favourite divs down here. It was like 5.5%. IT wholesaler, it was the div's now 4.5. So I reckon if you like it, it still looks fine, but personally I'd maybe wait, see if you can pick it up cheaper, get a better div. DBI, so the coal, the Derry Bay coal terminal, div of 5.3. So it's just a bit of a nothing week this last week. Seems to be getting some support, some buy up around here. So if you like it, why not? Deterra royalties. So they basically just take a clip of BHP's iron ore revenue, and they're looking at picking up other revenues. Royalty companies basically lend, will give money to miners, and then they get paid back in what they produce. So it's a pretty good business model. I like it. Div of 5.2 looks good to buy now. Elders. Okay, so Elders, agricultural products, services. So div of 4.9 seems to find some support around here. Okay, and then we've got some of our iron ore miners. Now this is the iron ore price, so it doesn't pay a dividend. But I'm just showing it to you because it looks quite strong. So I reckon this will flow through to the likes of Fortescue, div of 7.3. So it's in its consolidation area. The GQG div of 10%. This is why you gotta wait for some green, because this looks like it's going to fall over. So I'd stay away. IGO. So this is our lithium, part of a lithium, the world's lowest cost lithium mine. Plus it's got some nickel, copper, and a refinery, which would be good if they got rid of. Anyway, the div's 6.0 came back. It's tested support, so that looks good. Chickens, again, this is why you got to wait for the green. So you need to wait for something like this, something like this, something like this, something like this, because unfortunately that looks like it's going to take some more pain. Anyway, wait. IPH the same, the div of 9.1, the IP. No, you don't want to be buying that. Wait for a bottom, they'll be good buys. Okay, Lindsay Australia, our transport logistics, div of 7.8. Looks like they found a bit of support around here. You can see these tails come down and bought, so last week. So that looks pretty good. I like that. Macmillan Shakespeare. So salary packaging. So they've had there was a buyback here. So they've had their run. So let them. This is support. So again, like let it come down. If it